Hello, our research topic was miscellaneous itemized deductions. My name is Corbin Nelson. We also have Colby Miller and Jacob Moffitt. When it comes to miscellaneous itemized deductions, we really had three areas that we concentrated on. The first one was deductions that should not be subject to the Section 67 2% floor. Our next one was current deductions that should not be available. And our third one is adjusting for the advancement of technology. And now to get us started will be Colby Miller.
First topic we'd like to talk to you about is the unreimbursed employee business expenses. There's two categories that these fall under: job-related expenses and travel-related expenses. And there's three criteria that they must meet to be considered a business expense. That is, paid during the current year, critical to continuous employment, and presumed to be ordinary and necessary. Now, as it currently sits, unreimbursed business expenses are subject to a 2% floor under miscellaneous itemized deductions. However, with the way it currently sits, it is better for employers to reimburse employees for their expenses. That way they can take it as a tax deduction and it's tax-free to the employee. However, we would like to propose Section 67 B13 to exclude unreimbursed employee business expenses from the 2% floor of AGI, so employees can take the full amount of business expenses on their itemized deductions list. The second item we'd like to discuss, removing from the 2% miscellaneous itemized deduction floor, is the IRAs, traditional IRAs and Roth IRAs. Roth IRAs, you pay tax up front when you're investing your money, and traditional IRAs, you pay tax whenever you take your money out of the investment. And these investments are typically for people's retirement, and if they have a loss on these, they're subject to the 2%, they're currently subject to the 2% miscellaneous itemized deduction floor. However, we'd like to move the Roth IRA to where you get a refund on the amount of money you've paid in taxes towards this account. When you were expecting an investment and a long-term gain on these, and you're paying, and so essentially if there's a loss, you're paying taxes on something that never really happened. Now, for traditional IRAs, we would like to take a loss on these as a capital loss like you would a stock.
The second main point of discussion is deductions that should not be considered deductions. There are three key areas in this topic. They are hobby losses, gambling losses, and safety box deposits. The first two, hobby losses and gambling losses, are both personal expenses in nature, and consistently throughout the IRS's history, personal expenses has not been allowed to be deducted on tax returns. The third area, safety box deposits, allow too much area for an individual to skew what he is reporting on his return. According to the IRS, it has to be reported that these are only used to hold stock or investment or capital paperwork. They cannot be allowed to hold personal property and still be deductible. There's just no way to know if that is the truth. Those are the reasons that those deductions should no longer be deducted, so hopefully that we can gain some more tax revenue from the other areas where we are cutting from. The third main area of our paper is to allow for the tax code to adjust for advancements in technology. According to publication 529, watches are not allowed to be deductible as far as reimbursed business expenses. Well, cell phones are allowed to be deductible. With upcoming technology, it has now been a trend to see watches that are considered cell phones at the same time. This is going to create a void in the code to not be allowed to address this problem as it continues to rise in popularity. We see that it would be proactive to address this problem and adapt the code to adjust to allow watches, cell phone watches, and cell phones to all be deductible as long as they pertain to business use, either non-reimbursed or business expenses.
This wraps up our research topic analysis. We believe that these three changes will really help clarify and equalize the miscellaneous itemized deductions. And as for Colby and Jacob, thanks for listening.